Hello, my name is Angelique, and it's time for your market update. This past week has been a wild one for markets, a real gut check moment. The S&P 500 tanked 2.7% on Monday, March 10, shedding $4 trillion in value, a very ugly day. By Thursday, it slipped into correction territory, down 10.2% from its February 19 peak of 61.47, closing at 55.21. But Friday brought a 2.1% rally, showing the market's got some fight left in it. This isn't a complete meltdown, it's a stress test. And it's passing with gritted teeth. What's moving the needle? Well, earnings struggles, trade tensions, and a jittery global economy. Investors are on edge, but Friday's bounce hints at hope amid the chaos. Earnings this week paint a picture of market taking some punches but still standing. Tech got clobbered. Nvidia lost 5% Monday, and Tesla shed 15% midweek, a $125 billion hit, now down 45% from its December high. Retail's wincing too. Walmart and Target issued cautious outlooks with Dollar General's 2025 EPS forecast at $5.10 to $5.80 below the $5.85 consensus. It's not pretty. High valuations at 21 times forward earnings are getting a reality check against the 15.8 historical norm. But there's some grit here. Dollar General and Dollar Tree popped 6% Thursday, and utilities climbed 1% Monday, showing pockets of strength. Companies are bracing for trade hiccups, yet the U.S. job market still adding jobs. The market's not really folding, it's adapting. Precious metals are the week's MVPs, where gold smashed past $3,000 an ounce for the first time on Thursday. Then on Friday, it hit $3,005, and it held near the $29.95 as a safe haven star. Analysts see 3,500 by year's end, fueled by economic wobbles and central bank buying. Silver is $33 an ounce, just steady with the 14% upside forecast for 2025. And this is all thanks to solar and industrial demand. Platinum and palladium are pushing up, but iron ore is rebounding, and copper is eyeing a lift if infrastructure spending kicks in globally. Metals are the calm in the storm, proving there's money to be made whenever stocks tumble. Crypto is bumpy, but buoyant as it's riding its own waves. Bitcoin slipped under 77K, but clawed back to 84,000 by the end of the week with a $3 trillion market cap and holding firm. That 9% dip hit midweek after U.S. Reserve hype fizzled, and Ether and others dropped 15%. Trade fears aren't helping. Risky assets did take a beating. Still, the vibe's not doom and gloom. Crypto's volatility isn't new news, but its resilience shines. And getting back to over a $100,000 Bitcoin by year's end, if not much sooner, is not off the table if sentiment flips. There is so much out there these days where many love it, many hate it, and it is considered a wild card by some. Well, it depends on how you look at it. You have to admit, currently, Bitcoin's still in the game. As for the market in general, you just need to zoom out because it's a split screen week. The S&P 500's 10.2% correction, NASDAQ's 12.5% slide scream trade war blues. 25% tariffs on Canada and Mexico kicked in March 4 with more looming. Consumer sentiment tanked 57.9 to a 2.5-year low, and inflation's at about 2.8%. Cooler than expected, but not calming any nerves. Bonds jumped, 10-year Treasury yields hit 4.32%, and the dollar is flexing. Then Friday flipped it. S&P up 2.1%, NASDAQ 2.6%, Dow 1.7%. Canada's TSX soared to a record Thursday on gold fever, while Europe's Eurozone slipped 1.3%. The Fed's on pause after solid jobs data, but Goldman Sachs bumped recession odds to 20%. So it's a tug of war, fear versus fight. Looking down the road, it's a mixed bag with some muscle. Stocks might not repeat 2024's 20% plus gains. Goldman Sachs cut that S&P target to 6,200, citing a trade drag, but 9% growth to 6,500 isn't wild. Gold's $3,500 per ounce path looks solid. Silver actually, however, could outpace it. And crypto's a coin toss. Volatility is baked in, but there's upside there. Metals like copper and iron ore might shine if global projects ramp up. The negativity? Trade tensions. They could shave GDP, and stagflation whispers are loud, but we also have some positivity. The economy is not dead. Jobs are steady. Inflation's easing, and markets do rebound fast. We have leaders and visionaries at the helm, and the system is, of course, digging in. The market's like a boxer after a rough round. Bloody nose, but still throwing those punches. Will 2025 be a TKO or a title win? Grab some popcorn and let's see. Sometimes you need to break down the old to bring in the new. I've been saying for a solid 3 years now that we need to learn to trade to the downside of the market. Money isn't only made on the way up if you know what you're doing. And ghost traders, you know exactly what I'm talking about. Our overall reality check is that our challenges are not hidden. The markets hate uncertainty. But resilience showed through in Friday's rally and metal strength. Trump and Elon get a nod for the trade and crypto moves, but this is also the market story as well as theirs. Well, ghost traders, things are happening and happening fast. Every morning when I wake up, I am never shocked to see how overnight the insanity, good and bad, still ensues. Many, many changes are taking place, and the more people are waking up every single day. And this is good. Keep up the great work, and I will see you in the live sessions. Have an amazing week and happy trading.